Hey everyone, welcome to our high net worth investing video series. We're going to be going over strategies for high net worth individuals. And this topic today is going to be covering how to sell highly appreciated assets, businesses, stock, real estate. What are ways to do that to reduce your overall tax bill you're going to be receiving there? We have a lot of great stuff we're going to be going over today in detail. And with this, when you sell a highly appreciated asset, the goal is to try and get your tax brackets down, right? Because we have different capital gain brackets federally. The goal, if we're selling something for over $1 million, over 500 grand, right? Because we got 584 is this limit here. How to go from the 20% to the 15? Right? How can we do that? Or maybe go to zero potentially. And what are some strategies that we can use to help us get there? Okay, so a couple things that we're going to be talking about today. And the first thing actually is quite simple and could work depending on the deal. Okay. And just an FYI, this is something that you want to determine these strategies before you sell whatever building or property or business that you have. Because sometimes if you don't do some stuff beforehand, it's too late. There is some things you can always do after the fact, but it's always better to plan this stuff beforehand. So you can call someone, definitely can talk to us, we're over these people all the time, are around this kind of planning and make sure you can mitigate your taxes in the best way possible. Okay, so first thing, right? You can have an installment sale. Okay, what does that mean? It means that payments are broken up on your business. So there's a cool ways that you can do this, right? One is if you have an installment sale and you're selling your business for $10 million, well, what you could do if you wanted is you can say, hey, over 20 years, pay me 500 grand. Now, what does that do? Well, now you're taxed at 15% because we're below the 586 if we have no other income going on today. So we're saving money. Instead of paying $2 million in taxes, you'll pay 1.5 million. And you're going to get this money over a 20-year time frame. So the pros, yeah, we're paying less in taxes. The cons is now we're relying on whoever bought our business to actually follow through and pay us for 20 years. Now, for some of you, you're selling it maybe to a family member. This makes a lot of sense for you. For your private equity firms buying you out or a stranger, someone that you just met who's buying your business, you might not want this. You want to take your money, get it all up front, and be good to go. We have strategies for that, but just to give you an idea, this is one option that could work really well if all things pan out on that end, right? So installment sales, right, can easily work there for something like you're selling a business or a property or anything like that. Now, the next one kind of gets into the exchanges. This is kind of more real estate related. As everyone knows, there's some different ways to defer taxes out, right? So we get to the exchanges. And with this, there's a couple different ones that are out there, right? 1031 is pretty popular. All right, people kind of talk about that a lot on different videos. All right, essentially, you can exchange one like property for another. So that is a possibility that you can do there. There's a 721 exchange on there as well, a little bit different than 1031. And there is a DST, this is a Delaware statutory trust, right, that you can create and put money in there from a real estate sale and defer on capital gains and invest in something else, right? So there's a couple things, a couple options that you have when it comes to exchanging. We're not getting into all the details today, right, on this, but there are some options that you should just be aware of. If you don't know what these are, look them up. I'll have some other videos on them below that will go into more detail on this side. Now, the next thing that we have going on here is something called, right, and some of you actually might know this, but we have a charity remainder trust, right? A CRUT is typically the nickname for this. where you form a trust that's going to go to a charity. All right, typically, and this could range, normally it's around 10% of assets, right, are supposed to go to a charity. And with this, you're able to take a lump sum of money and turn it into your own installment sale, but you received everything, right? So you actually kind of owe yourself the money. So money goes into the trust, right? And then you can pay yourself out, right, over 5 to 20-year time period. And you get taxed on that money as the money comes out of the trust. So a little bit different than just getting the payment up front. So again, like a $10 million sale, instead of trusting the owner on the installment sale, the new owner, all right, you just get that money up front, you put it into the CRUT, and then you can receive this payment over that time period. Okay, the money is not necessarily liquid in there. You can invest it. So this $10 million, you can invest it in publicly traded assets, so like stocks, bonds, mutual funds. All right, has to be publicly traded. All right, but you can do that and then take money out every single year. So the money account will grow, tax deferred. All right, you take money out every single year. There are certain rules you have to follow. We'll have another video on CRUTS that go more into detail on how they work there. But so you get an idea, could be a good way. It just depends on what your goals are with the business, right? So that is another way that you are able to actually defer taxes out within the business. And another way, right, that's a little bit different, kind of more on the real estate side of stuff, but real estate does have a lot of tax advantages, is you could buy and take money and buy into a qualified opportunity zone. Typically, if you buy property in an opportunity zone, you can defer out capital gains you had from other sales. And if you hold on to this long enough, right, depends on what year you're in and what you're looking at, the tax would actually go to zero eventually. Typically, it's a 5 to 7 year hold, depends, right, again, on the year that you're doing this. But these are also good options to have if you're selling a business and you want to buy some real estate. So you're selling your business, trying to buy some real estate with it, and you buy in a qualified opportunity zone, there could be some good tax saving options for you. Within there, there are also funds that buy in these places for investors. Right, so there's different things that you can do around that. And again, right, you gotta be aware of what your goals are with the money and what you might want to do with it going forward. And the last thing that we're going to talk about today is IRS Section 1202. Okay. So with this, a little bit different, but if you're a C Corp, you're a C corporation, you own a business, and you're looking to sell it, and you've held that stock for 5 years, right? A qualified stock that you made that followed the guidelines for 1202, then technically up to $10 million could be tax free. Right? There's certain guidelines you have to follow. And again, a complicated subject we're not going to get into today, but hopefully this gives you some ideas on what options are out there that could maybe help save you some taxes when it comes to selling a highly appreciated asset. Now, if you're out there and you're thinking, geez, I might sell my business soon, I might sell my real estate portfolio, or I'm looking at selling this stock that I've been holding for a long time, but I don't want to pay the taxes on it, what are some good strategies to actually go forward? Then please give us a call. We work with people all the time around this material to make sure that you're making the right moves for your business and you're getting almost all the business you possibly can while paying legally, of course, the minimal amount of taxes. So if you like this video, check out our others below. We're gonna have a whole series on high net worth planning that can be very valuable to you. So subscribe, like the video, and we'll see you next time.